Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Wednesday, May the 8th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Want to first start off by taking a look to see how the indices closed the session out here for the day. The Dow Jones was up about 49 points or so. The Nasdaq was up a little over 16 and a half points, and the S&P 500 was up close to 7 points, closing the session up 6.73. The strongest index out of these three right here was the Nasdaq, up close to 0.5%, 0.49. We take a look at the breadth on the market. We had 3,904 issues advancing on the NYSE, Nasdaq, and the Amex. We had 2,128 issues declining on the NYSE, Nasdaq, and the Amex. Therefore, breadth was in favor of the bulls, close to a 2-to-1. A lot of bullish action across the boards. Of course, the market continues to trend higher. All of the intraday dips continue to get bought up. So if you're looking to participate on the short side, you got to be very quick, or those dips will get bought up. So what makes sense is just waiting for the dip to happen and then buying the dip instead of going short. But if you're fast and you're an active trader, there's definitely opportunities on both sides of the fence. So let's go ahead and take a look at this SPY, which is the S&P 500 ETF. Starting off with the daily chart here. You can see on the daily chart, we closed at 163.34. We continue to remain above this key 160 level, which is a pivot area that you want to watch from this little inflection high. Prior resistance now acts as support, so 160 is definitely going to be a key level to watch if and when we do come back down to that level. In the short term, we want to keep an eye on these short-term moving averages here above the rising 5 and 8 EMA SMA, also above the rising 20, and you can see the moving averages are starting to move further apart from each other, showing you that the trend is picking up some steam here. Okay, if we take a look at the 15-minute chart real quick, just to take a look at today's action, since I was not able to do a midday market update video, you can see we had a little bit of selling pressure that came in here around 2:30 or so. That got sold off. That dip got bought. And then it took us up to new highs here. So the SPY made new highs today. All right, so continue to watch the trend in the market. Continue to be a dip buyer until that trend changes. If we take a look at the triple Q here, the Nasdaq action, you can see the triple Qs are up 35 cents today, closing the session at 72.71. Again, once we were able to break above this key 69 level and stop all this little action where we were breaking down, breaking out, breaking down, we finally got the clue that we're ready to go once we got the nice little breakout above 69.10, and we held above it, and we broke over these highs, and we saw that continued momentum pick up there. That was a clue. At the same time, if you guys been watching the videos, all right, I showed you guys my proprietary channel analysis on the Nasdaq futures, showing you guys the upward channel that we've been trading in, highlighting the fact that if we break above the upward part of this channel right here, you can expect momentum to pick up. As you guys know, these channels usually tend to resolve themselves to the downside, and when they break up to the top side, you usually have that nice momentum that picks up, and that's exactly what happened, folks. So make sure you're tuning into the videos. Make sure you're checking out the website, wallstreettrading.com, and make sure you go to check out our live trading room, mywallstreettv.com, which you can access via the website by filling out the form on the right-hand side of the website there. So the triple Qs are looking good, of course, here. All right, we have the tech sector is looking good. Google was up close to 2% today. Apple is up a little over 1% today. HPQ had a great day today. So there's a lot of action here. All right, but in the short term of the Qs, you want to watch that rising 5 EMA, which we're using as a gauge right now to measure the short-term momentum that we have in the market here on the Qs. You can also use this rising 8 EMA, which is around here around 71.62, and then you have the 20-day moving averages down here around 70.46. All right, again, we broke above the 50% retracement on the Nasdaq on the triple Qs from the tech bubble sell-off. That level was 70.52. So as long as we can hold above 70.52 and above this key area right here, 70.52, 70.60, which also lines up with the top of this trend line that we've been tracking with you guys here. All right, you want to be a buyer of dips. All right, because the next level is the 61.8% retracement from the tech bubble sell-off is around 82.37, which is about 10 points higher, which is about 10% on the Qs here, a 10% up move, right? If I'm doing my math right, it's been a long day, somewhere around there. So that looks pretty decent. If you take a look at the IWM here, IWM had a nice little move up today as well, up 28 cents here. A little slow grind higher, guys, because I would expect the grind to be slow for the fact that a lot of people don't want to buy the market up here. At the same time, a lot of people can't short the market up here because the momentum is in the tape. So therefore, it's pretty hard to get involved on on either side, unless it's quick. And even people, some traders don't even want to take that quick trade because the trend is up. They want to, work with what's easy, which is pretty much buying and holding, and that's what's going on right now. All right, so if you take a look at the IWM looks pretty good, making new all-time highs. Continue to just watch those short-term moving averages as a gauge, and you should be in good shape, folks. All right, let's take a look at that dollar futures chart because I do think the dollar is causing a lot of this action that we have going on here now. We did have that little seller pressure that came in off the recheck of that trend line that we broke, a little trend line channel that we broke from right here, and we sold off. We got the little back test of the trend line break that we had right here. That back test held, we bounced up, but then guess what? We put in a lower high. So we have a lower high, we have a high, a lower high, a low, a lower low, a lower high. So this is starting to pick up this little downward momentum back again here. And if the dollar starts to roll over, like I've been saying, we could have that reinflation trade pick up again on the expectations of a lower dollar, and we could have that those basic material stocks get bought up like I highlighted 2 weeks ago, which has been going on as we speak. X, CLF, FCX, all these material stocks are getting bought up off these lows since they've been getting sold off for the past couple months or so. So we want to keep an eye on those basic material stocks. We'll take a look at a couple of them here shortly as well. So make sure you stay in tune for the rest of the video. If we take a look now at the euro dollar to see what's going on over there, the euro dollar has been getting some bullish action. All right, the euro dollar is, tested the top of the range. Really got to break over 132 if the euro is going to break out. If we break over 132, that would be and close above it a couple of consecutive times there. We should get some more bullish action in the euro, and that would of course be good for the markets. And it kind of looks like we're trying to form like a little bottoming pattern down here off this little reversal that we had from those highs back in February. So we'll see how that plays out. Just know that the dollar's acting weak right now and the euro's acting strong, and that's usually a catalyst for a nice up move in the markets. All right, now let's go and take a look at that volatility index, which is getting crushed back down all the way at 1266. All right, the next level you want to watch is down here towards 12. Then we'll be going back down to the year lows, which is around 1096. Call that 11. But as you can see, volatility nowhere to be found in the market. We're just cruising higher, and the VIX is stair stepping its way lower. So we'll see how that plays out. All right, folks. What else do I want to take a look at with you guys? I wanted to take a look at gold. Gold had a nice little move up today. There was some conference or something that they were talking about on CNBC. I'm not sure what conference that was or what was the news catalyst. What was the catalyst that caused gold to get a nice little pop-up intraday? You can see here gold had a nice little breakout over the highs around 12:55, 1 o'clock. I believe it was some news, again, had to do with some news that came out at some conference they were doing, if I'm not mistaken, and it had a nice little pop-up. So keep an eye on this gold. We're starting to close above the declining 20-day moving averages. The 20 EMA starting to flatten out, and the short-term moving averages are starting to flatten out. And the GLD has been trading in a range here between, say, 138.75 or so and this 142.50 area. So if we can get out of this range and start holding above 142.50, we have this little gap resistance to contend with around 144. And then we have this little gap fill all the way that's up here around 149. So keep an eye on that gold. I would have to say now that was definitely a good buying opportunity down there on the gold down there at 135 in the GLD. It's been having a slow, steady recovery, but we'll see. It still has a lot of technical damage that it's done on the chart that needs to be recovered. As you can see, we still have this big consolidation base that we broke down out of here from this little range breakdown, and that will be the next level to watch if we were to rally all the way back up there towards that 150 area. All right, so keep an eye on the GLD. Some of the gold miners had a nice little bounce today. If you take a look at the GDX was up $1.59 today, up 5.5%. And we could be getting some traction here. So you want to watch the gold miners tomorrow. You can see that GDX was basing at this 29 level. We had this little short-term momentum trend line that was broken. this thing could break past this 20-day moving average, start trying to fill some of these little high gaps that we have around here, around 33. We have this little gap resistance window right here around 32. So it has about $1.50 in it, $2 in it to the top side. If it could hold this momentum, had some nice little volume that came in today compared to the prior, the prior 2 weeks there. Those trading sessions, just lackluster volume. Today we had some nice volume. Want to see another fall through candle tomorrow with some decent volume? That would be a good sign. For some of you guys that watch the SLV out there, silver was up today as well. Silver was up 2 cents, pretty flat. Not much action there. Still has a lot of damage to recover as well. You can see this one's trading in a little choppy range between 22.50 and this 23.5 level. And right now, it just looks like dead money. All right. If you're looking to get involved in any precious metals, I would focus on gold or the gold miners. And even those, again, folks, those have a lot of technical damage that they have to recover as well. Now, where the action has been is in the financials, Goldman Sachs, JP Morgan. I highlighted the fact that Goldman Sachs had this nice little downward channel that was in play. You can see it broke the nice little downward channel that we have marked in the chart here. And we'll be looking for this thing to make its way back up towards these 158s, right, in the coming weeks. As long as everything stays kosher, everything looks good, we should be all ready to go. Now, JP Morgan was a strong bank today, one of the stronger banks out there, along with Wells Fargo, which gapped up today. But JP Morgan breaking back above this 50 level would be good. We'll be looking for a move back up towards 51 there, but we want to make sure it can hold above this 49.5 level. All right, now Wells Fargo had a gap up today. I'm not sure what the gap up was from, but it had a nice little gap up, or maybe just a technical gap up. I'm sorry, not a gap up. It actually had a gap down. Excuse me. All right, had a gap down. I'm not sure what the gap down was from. I knew it was gap up or gap down, but I knew I did see it throughout the day, and it did recover pretty well. All right, and was able to close back positive by 35 cents. Okay, so some good action there. The financials are strong. If you're looking to catch some action, you definitely want to focus on the financial sector. As far as what I was saying with some of these energy stocks, you could take a look at Halliburton. All right, some of these energy names have been performing pretty decently. Halliburton continues to make its move higher after we called out this nice little downward trend channel break. It's the same pattern that Goldman Sachs has on it, guys, and you can see this one just about hit its target up there. You should be expecting Goldman Sachs, if this pattern plays out, if the pattern plays out in Goldman Sachs, if Goldman Sachs plays out like this Halliburton pattern did, we should be looking for a move up towards 44. I mean, up towards that to those 158s. But same thing here, downward channel break play worked out pretty good. What else? Some of these energy companies that reported good earnings yesterday, APC reported earnings yesterday, sold off, had a nice little bounce today. You can take a look at ExxonMobil. I've been pounding the table with the traders on the desk here about ExxonMobil looking good. You want to get involved in ExxonMobil. I actually pointed out to you guys as well in the video once we broke this little trend line, highlighting the fact that it's ready to go now. It's starting to move away from this 88 level, trap some shorts below there, below 88 in our little zone, and now it's making its way higher. Look for this thing to make a move up towards 93.5, 94. So this one even has some nice potential in it, and the trend is in there, guys. The trend is pretty strong. You can see nice momentum trend. You may want to wait for it to chop around a bit and try to get some pullback action, but any dips on ExxonMobil holding above 90, you want to be a buyer of. All right, the other large cap integrated energy company that's out there that's moving pretty good is Chevron. Chevron is stronger than ExxonMobil. All right, Chevron is consolidating right now near the highs, near its all-time highs. It looks like it's warming up for another price move up. You want to keep an eye on this little trend line right here, this little tightening pattern that's going on right now, and look for a move higher through 124. All right, as these moving averages catch up to price, it's going to give you a nice little base or a nice little area to work off of. All right, HPQ had a nice little day up. Had a nice day up today. I'm not sure what the news was. Looks more like a technical aspect of it's trying to get some gap fill action. Has this nice little gap. That's all the way up here at 22 and some change. And if it can hold above 21, we should be looking for that gap to get filled. So we definitely going to be keeping a close eye on this one tomorrow. All right, back to the banks real quick. Don't want to forget about Citigroup. Citigroup was one of the stronger banks today in the market as well, up 2.5% or so, up $1.18. This one had a nice little breakout over 40. What is this here? 48, and looks to go higher. Let's see. I'm taking a look at the monthly chart real quick. This thing has resistance at 54.5. It's the next target on that. So Citigroup, guys, looks good and looks real good. What else? The basic material stocks. I've been talking about these as well, looking for that dollar rollover. If the dollar was to start getting that weakness, and that we should see some money flow back into these cheap basic material stocks that have been getting knocked down since the start of the year and since October or so. And here we go. That idea is working out, folks. Exxon, sorry, not ExxonMobil, but U.S. Steel is getting a nice little bounce here, breaking this nice little downward channel it's been in since back here in January. You can take a look at CLF. CLF has been getting some nice bottom buyers in there looking to pick that chart off the bottom, which so far is working out pretty well for those participants. You can see once it holds above this 22 and gets some more consecutive closes above 22, we'll be looking for this thing to make its way back up. I would say towards these moving averages right here, towards 26. In the coming weeks, this thing should see 26. All right. I mean, that's just what it's looking like. It's looking like it's been trying to break past 22 ever since the past 3 weeks or so. No, not 3 weeks. Sorry, ever since March 19th, it has not been able to hold above 22, and now it's back above 22. Had a little bit of time to kind of consolidate and give everybody a chance to say, okay, what's the stock want to do? And it's showing some bottoming signs there, so it looks good. Keep an eye on it. All right, FCX copper has been acting pretty bullish the past couple of days, along with crude oil. These growth commodities, these growth materials. All right, basic materials here. FCX getting a bounce, and it's back above that key 31 levels. I would say as long as it can hold above 31, look for FCX to start making its way back up towards 34. Let's not forget that ExxonMobil did acquire some energy companies, not too long ago. I believe back here in February, I think it was back here. No, actually, sorry, it was back here in December, if I'm not mistaken. That was the gap down. Either way, that FCX is now, of course, their business model. They now have energy. They're gold, copper. So it's a good company if you're expecting some type of reinflation trade that could be taking place right now, especially if the dollar starts to break down. All right, because right now gold's telling us there is no inflation out there. All right, one sector that I am seeing strength in is Monsanto, the agricultural stocks. Okay, they're looking pretty good, so keep an eye on those stocks. Monsanto's kind of just grinding higher. Still looks pretty good as long as it holds above this 104 level. I highlighted this stock to you guys as well. Potash is looking pretty good. This one has been a little bit of the more momentum agriculture stock in there. It's a little bit it's overbought right now, of course, coming all the way from 38, so you don't want to be buying it up here. But look for intraday buy will pullbacks. You can probably get in there. It is coming into some resistance right here around 44, though, so be careful with that. The breakout level was down here around 41.50, or if you bought it down here when it broke this little trend line right there. All right, so down here around 39.50 was the first buy a little bit, and maybe add some more over 41.50. Either way, it's at resistance right now, so you want to be careful buying it up here. CF, I believe they had earnings. Have earnings tomorrow. It's today Tuesday, correct? Yeah, they have earnings tomorrow after the bell, and this chart looks a little bit interesting as well. So keep an eye on this here. All right, a lot of these stocks are trading pretty well, and this one pulled back to monthly support. So aside from that, folks, very interesting tape. Right now we're just trying to make sure we manage our risk accordingly and try to continue to buy these dips until they stop. Try to take some little short-sized scalps, which has been working a little bit, but if you're not quick, you can get burned. So you want to be careful if you're doing that. And that's about it, folks. Have a great night. I'll catch you guys bright and early tomorrow morning in our MyWallStreetTV.com live intraday chat room. Cheers.